I'd say that the outlook for the global economy is actually reasonably positive for the coming year. While it's been a very long economic expansion, and therefore we do have to be mindful that at some point we're going to run into the next recession, there aren't the usual signs of excess that we see when the economy's been running strong. Inflation's still low. There are plenty of parts of the world where unemployment's still high, and central banks have really been quite slow to increase interest rates. So it's not going to come to a screaming halt in the way some other economic expansions we do. And when you look at equity markets, certainly equity markets outside the US are now starting to price in a quite dire, quite bad outlook. Many of those markets are well below their highs that they've reached this cycle and in prior cycles. So European markets are 30% or more below their prior peaks. Japan's a quarter below its prior peak. So in those other markets in particular, we think there are some very attractive valuations, and over time those should deliver very attractive returns for investors. If we were going to highlight risks for the global equities, I think we'd really draw on a number of them. First would be the US market is still at quite a high valuation. We're starting to see some cracks emerging in the leadership of US technology stocks, but the valuation of the overall US market is at quite a high level, not as high as it has been at other points during the TMT bubble, for instance, but it's at quite a high level, and that's happening at a time when US profit margins are already very high. It's also happening, and this goes to one of the other risks, when the Fed is already tightening interest rates. And while the first couple of tightening moves by the Fed took a long time, we're now moving to a pace where the interest rates increases are coming more regularly. So I'd say the two biggest risks to the market, one would be the level of the US market's valuations, and secondly, the rate increases we're seeing coming from the US Fed. That obviously has an impact both directly on the US economy, as well as a broader impact across the world given the importance of the dollar. The third risk would clearly be the ongoing and increasing trade tensions between the US and China. They've been, I guess, escalating gradually through 2018 so far, but as we sit here right now, it does seem that over the coming weeks or perhaps months, we'll find out whether President Trump moves to the next stage, increases the tariffs and expands them to basically all of China's exports.
投资一定有风险，基金投资有赚有赔，申购前应详阅公开说明书。